Hey everybody, welcome back to Drawbridge Finance. I hope you're having an amazing day like I am. The other day we made a video about the pros and cons of different types of accounts. And so today I kind of wanted to do a video pertaining to an account checklist, like how I go through looking at my account and saying, well, is this account performing the way that I want it to? What do I need to change it to make it perform the way that I want to? And what kind of stocks am I putting into it? So all those things I'm going to cover today. Hey everybody, welcome back to Drawbridge Finance. My name is Levi Woods and this is an opinion channel about money. I can't believe what an amazing day I'm having, and partially it's because of you guys. You're amazing. I mean, I've got tons of new subscribers. I've got tons of new comments. People are telling me where they're watching from, which is so cool because I love that I'm able to help people make better financial decisions. And that's really the point of my channel, is to help people get rich so we can all get rich together. Anyways, if you guys haven't subscribed, you should. Make sure you go down right now, click the subscribe button, turn on the notifications bell. That way when I do a video specifically on a stock, especially when the price drops and I'm buying the stock, you get that notification in your inbox and it says like, oh, look, Levi's buying that stock. Maybe I should consider buying it too. Basically, I want to get right into this today. I've been talking to one of my patrons about taking a growth account and kind of converting it over to a dividend account. And he wanted to know my approach and like, what are the things that I look at in my different types of accounts and determining what actions could be taken or what actions should be taken in order to position myself in a good way. Should there be a market correction, or just in general in just growing out my portfolio consistently month after month. So today I'm going to go through a quick checklist of things that I look at. Here we go. Number one is the target value of my account. Really, all of my accounts, I need to know in the back of my mind, what is my RSP account going to be worth? If I've got my IRA account or my RSP, it's like, well, what do I want to be worth when I'm 65? What is the target goal? So there's two things that are important here. One is time frame and one is the dollar amount. So if my goal is to get my RSP to be worth $1.2 million, which I think is a reasonable amount, I want that to target when it's like 65, when I'm 65. So if I'm 39 now and I've got 25 years before then, I can make an assessment, know that if I have investments that are making on average a 7% return, I can be able to project right along that timeline and say, okay, I am on target for that 1.2 million. And so I need to know the target. That's the very, very first thing, because then you can work backwards from there. So the second thing I look at when I'm talking about account assessment is the planned tax strategy. Now, a planned tax strategy is basically this. It's like, well, if I have an RSP, then it gets taxed differently than a TFSA, and it gets taxed differently than a margin account. So when I'm putting certain investments into that, how is it going to be taxed in the future? And do I have a plan in place? Because I need to know the plan now and not just let them all grow or not grow, as the case may be, and then in the end say, oh boy, I wish I had a bunch more money in this account or the other account. So that kind of goes back into that goal setting, but the tax strategy involved with that. The third thing that I look at are the holdings within the account. Are the holdings themselves actually a good match? Now, I went over this in my last video, the pros and cons video of each account. So we talked specifically about the different types of holdings that I have in each account type. I'll put a link at the very end of this video, linking you guys back to that pros and cons video if you didn't already watch it, if you're brand new to the channel, and welcome if you are. So the fourth thing I'm going to look at is the account sector diversified. Basically, what I want from any of my account or my portfolio in general is to know that I don't have too many REITs or too many oil investments or too much in cryptocurrency or gold. Whatever the investment is that we're doing, we want to limit that. And so within the account, I usually try to sector diversify within each specific account, and as well overall through all three of my accounts. So after I've looked at sector diversification, the fifth thing I look at is the individual stocks. Are they right for that account? What individually are they doing? Do I have a positive outlook on each of the holdings in my account? Because if I have a negative outlook on it, I should consider selling at that time. If I think that it's going to go down, then I should consider taking that money, selling off those shares, and redeploying that money elsewhere. Now, the next thing that I do is I calculate the dividend yield. Now, my spreadsheet calculates this all the time. I have a custom spreadsheet that I use, and I can look any day of the week and I can just tell you exactly what my dividend yield is. But this is something that I would do on my periodic review of my account. I would say, okay, what is the dividend yield? Is it still in that sustainable range? If it's an RSP, is it in that 6 to 10 range? If it's TFSA, is it like in that 8 to 12 range? Would even be better. And so we have to make sure that the dividend yield matches the portfolio so that we can go back to that goal and make sure that we're making the target, because that's the whole point, is to target our future self. The next thing I'm going to do is look at the use of the dividends. When I get monthly income off of my dividends, is it coming in stock using a DRIP program, or is it coming in cash? And then when we take that cash, what are we doing with it? How often do I need to look at that cash amount? Because that will help me determine when I need to reassess this account. Leads me into number 8, which is my reassessment time frame. Now, if you have automatic contributions going into your account and you've got dividends going into your account and that money is pooling, and you know that when you make a purchase, you like to purchase $1,000 worth of stock at a time, then all you have to do is do the calculations backwards. You just have to say, okay, well, if I put in $100 every 2 weeks and then my dividends pay me $100 every month, then I know that I'm making $300 per month. And after 3 months, I'll be around that $1,000 mark. So every 3 months, I have to assess my account and buy some new stock with that cash. Now, that's why I like to use DRIP programs, because then it can extend that duration and I don't have to worry about my accounts so much. My RSP account and my TFSA account, I barely look at those. They're just boring. They're like really low risk investments. They pay dividends every single month. I reinvest the dividends. I keep some of it in cash, and it just is going forever and ever and ever. And it every year meets my target, and I know exactly what I'm able to make off of those accounts. So the last thing I'm going to do is set a reminder. Now, of course, if the time frame is once a month, I have to look at this, then every month on whatever date, just set that up in your calendar so that it pops up on your phone and says, hey, Levi, check out that stock portfolio. Now, I do this every month anyways because I keep track of all my DRIPs. So I have DRIPs in my margin account. That kind of forces me to update my book. So I look every month at my dividend payouts, and then I look daily at my options. So depending on where you are in your investment cycle, you may be looking at this more frequently. I think that most investors that are just starting out are probably not looking at this very often, once every 3 months or so, because their account value is small and there's not much they can do unless they're really aggressively contributing to it. Anyways, that's about it for today. Remember, at the end of this video, I'm going to put that link to the pros and cons video, which you guys should definitely watch. And remember to subscribe so we can all just get rich together. Thanks so much for watching. See you very soon.